I have now backtested 336 trades of Virgin Wick theory, which is my take on CCT by Cramson, which is his take on ICC by Sai. And currently it's resulted in a 47% win rate with a total of plus 131R over 4 months, and an expected value of plus 0.36R per trade. So definitely profitable, but keep in mind this is when taking all trades throughout all sessions without any additional filtering. And what I've found is the numbers get even better win rate, better expectancy when we focus on a few different filters, which I will break down in the later part of this video. But first, just to make sure we're all on the same page, I'll go through a super quick overview of the strategy, along with the rules and how I went about backtesting everything. Alright, so the strategy starts with Virgin Wicks, which is essentially any wick that is untouched. So if you draw a line all the way to the right from the wick, and it doesn't touch anything, then it's a Virgin Wick. So that's a Virgin Wick, that's a Virgin Wick. This is a Virgin Wick. Pretty simple concepts, right? So we want to wait for Virgin Wicks to get closed through, right? So it gets broken and closed through, and then essentially price will retest that broken Virgin Wick level, which we call a bullish POI, and then it will bounce off that level. So it's essentially a break and retest strategy. And so after the break, we drop down to the 1 minute time frame, and then we look for price to come back and retest that level, close below it on the 1 minute, form an inverse fair value gap, and then we long on confirmation of the inverse fair value gap. So that is essentially the break and retest strategy, or the Virgin Wick theory. And here's a super quick example. So let's say this is a bearish setup. So we've got this giant bearish candle closing down. It closes through all these Virgin Wicks. Yeah, I think that's all. Yeah. Okay, so these are our bearish POIs. And we would look for shorts once these POIs have been engaged on the 1 minute time frame. Okay. So from 1 a.m. you would start to look for your bearish POIs to be closed above, and then an inverse fair value gap back down. Okay, so we've closed above the POIs. Now we're just looking for an inverse fair value gap back down. Nothing yet, nothing yet. Alright, I think that's it. Yeah, so there's one here. Alright. Is that? It's close. So that closes at 25833. This open is 25. Okay, so technically not yet, but okay, wait, there you go. So there is your confirmed inverse fair value gap. You would enter your short there, put your stop just on the other side of the inverse fair value gap, targeting the liquidity down here, 1.5R. And then boom, you eventually get it. So that's the example really quickly. And now I'll just quickly go over the rules. Alright, so here's my approach to trading this strategy. So I'm currently trading NASDAQ and gold futures. I'm trading all session times just because still doing some testing on all the different sessions. So far all seem to be profitable, and I do live in Asia, so I'm actually awake for all of these, so I can trade them anyways. But yeah, Asia 8 to 12, London 2 to 5, New York AM 8 to 11. Risk is about 10% of available drawdown, which is $200 for 50k accounts. So what I changed recently is my stop loss is now on the other side of the inverse fair value gap, as you saw before with that example. I put it just right there, whereas before I would put it all the way to swing high. But now it's a bit tighter just because I've found if a setup is going to be successful, like 99% of the time, it won't go to the other side of the inverse fair value gap. TP is obvious draw on liquidity, as you saw before, or if it's more than 2R, then I'll just cap it at 2R. There must be an obvious draw or I would not take the trade. I won't target empty space. 1.5R minimum or 2R max. No partials, no moving stop loss, no trailing, no break even. Either win or lose, that is it. Each POI is only valid for an hour. After the hour, I no longer consider it valid. But if I'm still in the trade at the end of the hour, I will let it play out, unless a new setup appears. But I have noticed a lot of the times the trade will end up hitting the draw on liquidity even after the hour ends. But yeah, I will not enter in the last 10 minutes of an hour. And yeah, this is just a text description of the model we just went through. This is a bullish example, so you wait for a candle, hourly candle to close above virgin wicks. Then the virgin wicks become POIs, bullish POIs. Then we drop to the 1 minute, look for price to close below a POI. Previously, I would look for a candle to close back above the POI. But now I'm just entering as soon as there is a confirmed inverse fair value gap, even if we are still on the other side of the POI, which is what I call a front run entry. Stop loss and TP, yeah, we just talked about these. So these are the rules, and this is how I'm approaching both my live trading and the backtesting, which I'll just go over quickly right now. Alright, so yeah, I'm not going to go over the whole 300 trades of backtesting because to do that live will take days. So I'll just run through a few quick examples so you can get a better understanding of the model and also just see the process I use to backtest. And also if you want to backtest for yourself, you can approach it this way. So there's a few indicators I use just to make the process a bit easier. First one is just sessions and kill zones. So this marks out London, Asia, and New York, as you can see. Just makes it a lot easier, so I only look for the setup in these areas. Next is the Virgin Wick Theory indicator, which prints the so I've got it set on the 1 hour as my high time frame. So this just prints the broken Virgin Wick levels, so the bullish or bearish POIs on the chart for the hour. It is a bit glitchy if you like print candles forward, but as long as you just throw it on the chart and then you look backwards, I've noticed it's actually fine, and it displays all the POIs correctly. But I'll go over the trades and we will double check by manually checking the 1 hour time frame as well anyways. And then lastly is just the inverse fair value gap pro toolkit indicator, which just shows me where there are inverse fair value gaps, because we are only looking for entries when there is an inverse fair value gap. So yeah, with these indicators, I'm able to quickly just scan through different dates, different charts, and just see really quickly if there's any setup. Like for example here, this one. Just from quickly glancing at that, I can see, okay, so there's bullish POI, so we should be looking for a bullish inverse fair value gap, and there's one there. So what I'll do is I'll just go to the start of this hour. We'll drop down to the 1 hour. Oh, sorry, move up, not drop down. Okay, so we can see this giant Chad candle here closes through a bunch of Virgin wicks. We'll just mark them out there. Bang, bang, bang. And that's it. Yeah, so these are our bullish POIs that we can look for longs from 3 a.m. to 4 a.m. Okay, let's go down to the 1 minute. And then, yeah, real quick, I'll just remove these and you can see, bang, the indicator drew them out perfectly. But I'll just leave them there just for education's sake. Okay, so we're looking for a close below any of the POIs, and then an inverse fair value gap. Okay, boom, POIs have been engaged. Now just waiting for inverse fair value gap. Boom, our lovely indicator tells us there's a trade. So I would enter along there at confirmation of the inverse fair value gap. Stop loss is just on the other side of the inverse fair value gap or the entry candle. I don't know if I mentioned this before, but it's either just on the other side of the IFVG or below the entry candle, whichever one is safer or has the more space. I think that was in the Notion doc, but if it isn't, that's how I'm approaching it. Yeah, targeting 2R. Bang, just like that. And then we got stopped out. So then I would go to my Google Sheet, which I don't have open yet. Alright, so I've got the sheet up. This is where I'm tracking everything. So then I would go, what is this? August, NQ. This was a front run entry because we did not wait for a close back above the POIs, which is something I'm testing right now, which I mentioned in the last video. Taking the inverse fair value gap even before the POI is closed back above. So yes, that was front run. This was green, London session. See, I've also color coded it, so I don't even have to look. I just know green is London. And then high-low bias. This was something I was testing out, but the results didn't really show any significant difference. So we're just going to ignore that, but I'll talk more about it later. And then in result, I'll go -1. All right, on to the next one. So yeah, I go backwards with this because that's just, it doesn't glitch out the indicators. All right, so we'll move back. See, no POIs there. Go all the way to New York. So we do see bullish POIs, but we never close below, so no trade would have been taken there. All right, so there is one here. We got a bearish POI along with a bearish inverse fair value gap. So go to the start of this hour. Move up to the 1 hour. Okay, so we get this candle, it closes through this POI. And that's it, just the one POI. So there's your bearish POI. And we're looking for shorts from 8 AM. Okay, so no close above it yet. POI has not been engaged yet. Boom, there you go, you get a close above. Now you're looking for an inverse fair value gap. Alright, there you go. So that would be your entry candle. Stop loss there. Looks like we already got stopped out. But yeah, that is the loss. So I'll go NQ. Yes, that was a front run entry. Yes, that was during New York, and -1. I'll just do, let's just do one more example. See if we can get a win. Okay, so POI there, but never closed under it. Alright, let's see. We have a POI here, and an inverse fair value gap present. So there was definitely something there. Let's try not to look at it too much, and just go back to the start of the hour. Okay, so go to the hourly. We see this 11 PM candle closes above this virgin wick. So this becomes our bullish POI. And we can look for longs right there. Okay, technically this is out of the Asia kill zone, but just for education's sake, let's just imagine it is, because we've already gone this far. Okay. So we do get a close below it, so the POI has been engaged, and we just need to see an inverse value gap. Nothing yet, nothing yet. Huge dump down, huge dump down. Okay, boom. IFVG confirmed here. Looks like it's a front run entry. Long there. Stop either below the IFVG or just below the entry candle, whichever is safer. Targeting 2R, just like that, bang. And yeah, we get it, nice and easy. So yeah, this is how I would track it. August, NQ, yes, that was a front run entry, and that was Asia. And that was a 2R result. So then, yeah, you've got 2 losses and a win so far. Let's do one more. And then we'll get into the results. So the POI before that one, okay, yeah, it looks like we do get a POI engaged. So let's go here. Go to the 1 hour. Okay, so this 10 o'clock candle closed through this bullish POI. Sorry, this Virgin Wick, creating a bullish POI. So from 11 p.m. to 12 p.m, we can look for longs if the POI gets engaged. So go to the 1 minute and let's watch. Okay, so POI has been engaged. No IFVG yet though. Okay, so we do see an IFVG here, but if you remember before, we said there must be a draw on liquidity. So if we were to enter along there, there's really nothing for price to reach for. I mean, there's like these highs, what, 0.24R. So yeah, wouldn't take this one. And as we can see, price just chops around because there wasn't really any target for it to reach for. So, actually, it looks like you might get another entry. So let's go here. We get another confirmed inverse fair value gap here. So your long would be there. Stop just below the IFVG. So they're targeting these highs. What's that? 1.64R. Okay, so that's a loss. So yeah, I would have taken that because that meets my criteria. But that is a loss. So you would go NQ, that was not a front run entry because we did close back above the POI. Asia, -1. Boom. Alright, we'll just quickly do one more. Okay, let's see if there's anything here. Alright, so we've got this candle here, closes above this one, and this one, and that is it. So these are your bullish POIs. Drop down to the 1 minute, look for longs from 9 p.m. to 10 p.m. Okay, POI has been engaged. No IFVG yet though. So you do get one here, but yeah, there's no draw on liquidity. You would have to put your stop there, targeting that 0.8R. I wouldn't take that. Yeah, there's nothing there. Alright, let's move on. Looks like there's a bunch here. Alright, let's go here. Go to the 1 hour just to confirm our POIs. Okay, so we get this massive candle at 9 a.m. closing through this Virgin Wick, this Virgin Wick, this Virgin Wick. I'm sure there's a bunch more if we go to the left. Yeah, so many. Crazy candle. So yeah, I'm not even going to mark them out because that's what we've got the indicator for. So we just go to the 1 minute. Boom. Indicator does all the work. Alright, so these are our bearish POIs that we're looking to engage from. Let's see if we get an engagement and then an inverse fair value gap. Alright, so we finally closed above 1. Oh, and we have an inverse fair value gap. Let me just go back here. Boom. So there's your gap. There's where you would enter. Stop just above this candle's high, targeting 2R. And it gets stopped out in the next candle. So that would be NQ, not a front run, New York, -1R. But might get another chance. So we'll continue to play out the hour. Okay, boom, you get another inverse fair value gap. And that would be your entry. Stop just above that high, targeting 2R, because there's a bunch of liquidity down here. Let's see. And the hour does end, but like I mentioned, we're just going to let it play out. And yeah, we do get stopped out. Well, we're getting really unlucky with these. August does not appear to be a good month. Alright, I'll do one more, see if we can get a win. If not, even if it's a loss, we're just going to call it there and then go over the results. But this is helpful just to build the muscle memory of the model. Okay, so London session here, sorry, bunch of bearish PYs that never got engaged. There's ones here that does get engaged with an inverse fair value gap, but no draw on liquidity. So even though it dumped, I wouldn't take this one. Okay, it looks like there's something here. Okay, so that would be a trade. Normally I would do, fuck it, let's just do it, even though it's a loss. Alright, so bearish candle closes through this one, and that is your bearish POI. Slightly off, but alright. So we get a close above it. No IFVG yet though. Bang, okay. So you do get one there. So you would enter there, stop just above there, targeting these lows, and then cap it at 2R. But unfortunately it gets stopped out immediately. So I would mark that off as NQ. That is not a front run because we did close back below the POI. And yellow is Asia session. -1. So that's the backtesting process I did. Unfortunately, it looks really bad because we copped a bunch of losses, but I guess this must have been a bad stretch in August. But yeah, that's how I do the backtesting process. That's how you can do it if you want to do it yourself. I'll go over to the sheets result now. Alright, so here's what we've got as a result of all that. So if you can imagine, I just did what I just showed you there for 366 trades, I believe. Yeah, so I did December, November, October, September for gold and NQ. Yeah, so total is 47% win rate plus 131R, expectancy of plus 0.36R per trade. Yeah, all months ended up being positive. So even though the win rate drops below 50% at some points, we still have positive months every single month. So definitely profitable, but it does get better with more things that you add. For example, I was playing around with adding a 4-hour candle as a bias, so not longing above the previous 4-hour candle's high, or not shorting below the previous 4-hour candle's low. Let's see if I can bring it up. So, okay. This is what I mean. Let's go here. Yeah, so this indicator just shows you the high and the low of the last 4-hour candle. All right, I'll just play a few so you can see what I mean. Bang, bang. See, high, low. Okay, so when you drop to the 1 minute, this is what it looks like. So what I was trying was, if we got a setup like down here, like a short setup, I would not take it because we are already below the low of the last 4-hour candle. And the theory behind that is just that we are overextended to the downside, and it would be too greedy to expect more downside. And inversely for longs, I was seeing if it was unfavorable to long above the previous high. So, like, not taking a long setup here, because we are already overextended past the previous 4-hour candle's high, and odds are likely that we will return back down to the middle, the equilibrium. So that was my theory with this bias thing. But yeah, as you can see, when following that and when not following that didn't really have much difference. Both had an expected R of 0.3 or 0.32 R. And yeah, this is the main value we're looking at when determining how successful something is, because yeah, it's how much you can expect to win over the long term per trade. So that was kind of a no and nothing burger. The next interesting thing I looked at was front running trades. So as I mentioned earlier, front running a trade is taking the inverse fair value gap even before we close back the other side of the POI. Almost like using the POI as a draw on liquidity and banking on the fact that we will return there, but you're just catching the ride early. And turns out that's actually quite successful. So when you do front run a trade, you get 0.4 expected R per trade. And when you don't, it's only 0.23 R per trade. And yeah, this is enough of a sample size for me. It's almost 200 trades, or maybe it is 200. For me to feel comfortable front running trades. So that's why I've officially added it to my trading Bible. That being said, just because a trade is not front run, I'll still take it because it's still positive R. But yeah, for me, it's like an A+ when it is a front run. So your price has not reached back to the POI yet. Yeah, that was a really interesting discovery I found. And then here we've got a breakdown of gold versus NQ. Both are profitable over the long run, as you can see, but gold edges out just slightly. So 0.4 expected R instead of 0.32, but I'll still take both. Both still very positive. Next we've got sessions. So Asia definitely looks the best by far with 0.52 expected R, 53.3% win rate. Yeah, clear winner here. But of course, that being said, looks like all sessions are profitable. So yeah, if you wanted to maximize profits, then go ahead and trade all sessions, both gold and NQ. From what I'm seeing, that looks like a good plan. But obviously, if you cannot trade all sessions, if you want to minimize your screen time, if you could only pick one session, then I would pick Asia. If I had to choose one asset, one session, it would be gold and Asia. Seems to be the clear winner here. But again, all seem to be profitable. Yeah, London's slightly better than New York, but New York actually has more volume. So even though the win rate is lower, you actually have more total R. Not expected R, but total R is higher. Just because you have more volume, so more trades, more R, even though you win less. Interesting insight. And then here's just a table combining sessions and assets. So first up, we've got here Asia and gold for an expected 0.45. Asia and NQ seems to be a nice combo. It's expected 0.61 R per trade. London seems to be pretty okay on both gold and NQ. This was an interesting one. So New York, trading NQ during New York is only 0.12 R expectancy per trade. So barely profitable. It's the lowest out of all of the session and asset combos. But again, all of them still are positive. So you can't go wrong trading any of these. But yeah, it looks like Asia is the clear winner out of all of these. Yeah, so with all that said, my main takeaway is this is definitely a profitable model. I will continue to both live trade it and backtest it. One thing I am looking at is some sort of way to determine bias, which can help increase the win rate. So if any of you guys have any ideas that you have tested, or even if you haven't tested, but you think could be a good way to determine bias and filter out lower probability trades, I would love to hear it. And I might test it out. But so far, even without a bias, it is very profitable. And if you want it to be super profitable, you could just go trade gold during Asia and look for front run trades. That's like the A+ golden ticket right there. Yeah, I hope you like that one. I will continue to backtest and forward test, and thank you for watching. See you next time.